Today is a pivotal week for those who are watching stock market indices, as we've got a really important event happening after the bell. We've recently seen a 1, 2, 3, 4-day losing streak for the S&P 500, and so far today it seems like we're fighting our way back from those lows, up about 0.68% here for the S&P 500 at the time of recording this, and then we've also got the Nasdaq up about 0.82%, and the Dow Jones up about 0.4%, Russell's up 1% here, biggest winner on the day. But the question is, does this have legs to continue bouncing back, or is this just sort of a dead cat bounce in the context of a larger correction for the stock market indices? Let's get into all of that and more as we preview one of the most important events of the earnings season. It's Nvidia earnings, which take place after the bell today. This has the potential to seriously move risk assets as a whole, whether you're talking about the Nasdaq or the S&P 500 or even Bitcoin. A lot of these things could move heavily after the bell when we hear from the Nvidia earnings report. They're estimating in regards to revenue, $38.1 billion of revenue. And for this stock to really move higher, you need to see that number exceeded by a pretty wide margin. Just to point out the kind of severity of this Nvidia earnings report, if you get a miss or a disappointing figure, it is very possible that the S&P 500 and Nasdaq could very well head back down to those lows that we saw in the previous session. With rising growth concerns that we've talked about many times on the channel here recently, for example, slower than expected GDP growth, slower than expected services PMI numbers, lower than expected retail sales, rising inflation pressures, and JOLTS job openings seriously coming down. What we need right now is for Nvidia to save the day if you're going to get a stock market recovery. But if you lose the Nvidia story, which has been a large part of the hype here recently, you could seriously see some problems come into this market. For bears watching things like the Nasdaq, I would watch for a break and closure underneath this key level of support around 20,800 on NAS 100. For bulls, I kind of remain where I have been on this, looking for either a break through those highs or deeper retracements and a better macro outlook for a possible buying opportunity. And it's pretty much the same story when we take a look at the S&P 500. If we do get a really disappointing number from Nvidia, we could possibly see this level even get broken. But if we see a nice strong rally off of Nvidia earnings, let's see if we can actually get enough speed and break through those highs to continue the overall longer term uptrend. Next, I want to talk about metals. And this morning on my live stream, we had several people who were freaking out saying, why is gold crashing? And I literally pulled up the weekly chart because where is gold crashing? You have to remember, if you are going to be a trader, you got to make sure that you're looking at the higher time frames and understanding the context that you're in. If you're a scalper, that's one thing, but you can't let a move like this tell you that gold is crashing, I got to abandon ship, and oh my gosh, it's going lower, because yet again, we saw resiliency here from gold buyers. I was actually looking to potentially buy the dip around this 28.80 level, but didn't get my chance. Price reversed, just showing how strong the bulls are here still in this upward trend. Now, of course, we could see reversals, but I think for bears, the very least you would need to see from a price action perspective would be a failure at that level, and then perhaps we head back down to test this previous all-time high around 27.80. Scrolling out, you can see that was where we topped out back in October of 2024 and made a rush for the upside here after that. My opinion is that this area of support and this area of support could be buying opportunities as long as I continue to get solid confirmation from the EdgeFinder, which, based on what we just discussed with the economic heat map, is getting strong readings. You can see a lot of those economic data points like high inflation in combination with slower retail sales, services PMIs, GDP. You can see that the EdgeFinder is getting a stronger, very bullish reading because of those economic data points. The EdgeFinder specializes in filtering, scanning, and algorithmically scoring all of the economic data that we watch each and every day, but doing so automatically and generating a bullish and bearish watch list for traders. If you don't have a copy of the EdgeFinder and you'd like to try it out for 30 days, there's a link in the description down below to where you can get more information about it. Also, right now in our Telegram channel, which is completely free to join, we are currently doing an EdgeFinder giveaway event. All you have to do in order to enter the giveaway is step 1, join our Forex and Futures Telegram channel, and step 2, click this link, throw your name in the hat, and you might win a free copy of the EdgeFinder. The link to join this Telegram channel is in the description down below. So when I go to the top setups page and I filter out the neutral readings, this is what we're left with. We currently continue to have some pretty strong signals for bearishness on yen pairs, which I am already short on Swiss yen. And at the same time, we have bullish readings for gold, for the DAX, silver, and a collection of GBP currency pairs. I was recently watching the German DAX for a possible pullback, and we never really even got to the point where I could get into the entry before price reversed course and has been moving back higher. I think part of the optimism here is that if there is a conclusion to the war or a resolution to the war happening in Ukraine, that would potentially be very bullish for some of the European equities, which have been held down a bit because of their proximity to the region and conflict going on there. We know Trump is the self-imposed deal maker, whether you like him or not. He does have a track record for making a lot of deals, and he's trying to make one right now between Russia, Ukraine, and the United States. The thing here is oil prices since Trump actually took office have really gone to the downside. Let me show you. Here's January 20th, the day Trump was sworn into office. You can see there has been a pretty big drop in oil prices. But before you celebrate and say, haha, told you Democrats that we would have low gas prices, there's other things at play here that we do have to acknowledge. And again, I'm not here to spread political, hype one way or the other. I am here doing my best to be a reporter on market movements and what is happening. And so I do think it is fair to say, hey, look, oil prices are so far lower. Possibly there's some global conflict resolutions and Trump may be negotiating some deals. But there's another side to this that we do have to acknowledge, and it would be unfair journalism to avoid this topic as well. We see falling interest rate yields for the U.S. Treasuries. Now, of course, you may say, well, that's because Trump's getting inflation down, but that would be incorrect. Inflation has actually been rising. So how on earth are bond yields going down? Well, it's because of what we started this show or this video here with, which is the economic heat map showing contraction in economic outlook. So oil prices may be coming down partially due to some geopolitical conflict resolution in Eastern Europe, but at the same time, it's coming down perhaps because we're seeing economic outlook and the state of the consumer starting to weaken. We see GDP growth coming in lower than expected. We see services PMIs, which is a forward look at the services part of our economy. Expectations are actually less optimistic than they previously thought were forecasted to be. So you can take your pick, and the problem with politics is you can always kind of fit the data to point out what you want to hear. So I would just encourage you, if you're a trader, put your politics to the side and let's face what we've got in front of us. We have a falling 10-year yield, and we also have falling oil prices. Perhaps there is some geopolitical conflict resolution, and maybe the deal maker is back at it again, but at the same time, we have consumer sentiment weakening a little bit and outlook for the economy starting to drop just a little bit. So that has been part of the reason you've seen stocks kind of flat over the last few weeks and months, and at the same time, falling oil prices and the dollar also kind of starting to weaken as well. During all of this, a place that I have kind of been hiding out is in TLT. This is a bond market ETF, and this definitely benefits when yields drop and there is kind of economic concern. TLT generally can do pretty well. If you're seeing a growth scare starting to materialize, which I personally think we are, TLT and Japanese yen should do well. That is why I'm positioned short on something on Swiss yen, and at the same time, I am currently in a long TLT position as well. For those of you guys who are US Forex traders, I wanted to tell you about today's video sponsor, Oanda. Oanda has a generous welcome bonus available for US clients watching my videos right now. There's a link in the description down below. If you're looking to trade specifically FX, like euro dollar, dollar yen, Swiss yen, all those different currency pairs, you can find out more information about Oanda down below in the description and take advantage of that generous welcome bonus they've set up for my subscribers. Now back to the video. Bitcoin is continuing its losing streak, at least so far here at the time of recording, trading down at 86,500 and hitting an intraday low at one point at 85,300, let's call it. I mean, that's a pretty good slide for Bitcoin. And actually, I made the point here on the live stream today about what a broken chart, quote unquote, looks like versus what it doesn't look like. And I compared gold to Bitcoin. Check out this clip. If somebody says, I know gold is going to go up from here, they're not a profitable trader, period. Point blank. You don't know anything. The markets, you never know anything. You think something might happen, but you never know. If you know something, why do you have a stop loss? If you know something, why are you ever in drawdown? You never know for certain. Markets are not that predictable. I've been an advocate of this since the dawn of my YouTube channel. You never know something. You only make educated guesses, okay? Get that out of your dictionary as a trader. You do not know anything. And to be completely honest, it's actually been a very humbling mindset shift for me to realize that in life, you don't know a lot of things. Life is unpredictable. The markets are certainly not predictable. And there's going to be times where you have crazy uptrends and they pull back, and they might actually pull back more, right? We could see gold go back to 2,800. I'd still be overall bullish if the fundamentals still make sense. You want to talk about a chart that looks a little uglier? Pull up Bitcoin. There you go. That's a chart that looks a little bit more dire. So here's the thing. I know there's a lot of people who are interested in stocks, gold, Bitcoin. Let me just address gold for a second. This is not a broken chart. Now, I focus on the daily chart because this can be super deceiving. I don't really like the low time frames personally because they're super emotional, deceiving. They don't really give you actually full context to what's going on. Look, we live in the human brain operates on a 24-hour cycle, right? It's built into our very core on this planet. We go around the sun, right? Unless you believe the earth is flat like I do. The idea is that daily charts make a lot of sense because daily charts give you context to like our everyday lives. And most traders, most human beings are operating on kind of a daily chart type of time frame, mind frame. So what I mean by that is gold really selling off? Is it really crashing? No, not at all. It's been flying higher. Did it feel like it was crashing when it was at this same level a couple weeks ago? No, it felt like it was cratering, or it was cratering upwards. It looked meteoric to the upside, right? And now that we're coming back to that same price from the other side, people are freaking out. Is this chart broken right now? No. To me, that would signal, I think we probably go higher there. If we don't, though, I'm not going to panic, freak out, and blow my account. That is foolish. If you're going heavy long gold right now, thinking this thing has to go higher, again, I go back to my previous statement. If you think anything has to happen in markets, or something's going to happen in markets, close down your account, call your broker, say, hey, I'm just going to withdraw everything because I shouldn't be trading. I'm not right for this. Okay. I'm not trying to be mean. I'm trying to help you. To be completely honest, I am being as transparent as I possibly can. You do not know what's going to happen ever in markets. Get it out of your brain. You don't have to know what's going to happen in order to make money overall. You can manage risk appropriately, make educated guesses, and you're going to get it wrong sometimes. You're going to get it right. You're going to get it wrong. How do you manage it when you're right? How do you manage it when you're wrong? That's what makes you profitable, because nobody knows, not me, not you, not anybody. Nobody knows what gold is going to do for certain today or tomorrow. Okay? With that said, this is not a broken chart. Gold coming down to this area and testing this area is not a broken chart, in my view. That could certainly still happen. We could actually break this level, and I wouldn't call that chart dead either. This is a really powerful upward trend that's finally taking a breather. So I'm not worried about gold's momentum to the upside unless you break this level. If you break this level, okay, I get it. Momentum is broken. This chart looks broken. We're done with the idea, right? That's the game plan. We don't know what's going to happen. I like this area for a possible buy. If this level goes further, I might try again, depending on what the fundamentals look like at that time. Okay, that's not a broken chart. You want to talk about a broken chart? Broken chart to me looks like Bitcoin. This looks like a broken chart. Take a look at the daily chart. We said it back on Monday when this candle closed like this. This is seriously concerning. For the last several times you've been at this level, buyers have quickly wicked that low and pushed price back up. We now see Bitcoin's price action behavior failing out at key levels of support.
Many traders don't know this, but a lot of trading profitability is dependent on you using the correct brokerage when you're trading. Remember that your trading costs are an input to your trading results. So what I mean by that is trading costs such as commissions and spreads and swaps and overnight holding things, all of that plays into your final results as a trader. And another huge thing that I cannot emphasize enough is you making a deposit into a brokerage account can earn you some significant trading perks if you use the right offer links. In the description down below, we have put together a collection of some of our partnered brokers that offer welcome bonuses when you make a deposit, free stock shares when you sign up, and access to some of our products for free. On our website, a1trading.com/brokers, that's a1trading.com/brokers, you'll see a list of free offers that you as a client to these brokers can get upon sign up and deposit. Do not make the rookie mistake of just signing up for any brokerage and not using a specific offer link. If you use our referral links, you'll get something out of it, and you'll also be supporting our work here on this YouTube channel. Thank you for watching. We'll see you next time.